Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning, as usual, on October 21st. So officially, again, nothing's really changed in the market. Intermediate term trend down, longer term trend down. 80% of NYSE and NASDAQ stocks are below their 50 and 200-day moving averages. Usually you're getting a few hundred stocks hitting new lows each day, which is kind of the sign of an unhealthy market, so on and so forth. So officially, we just remain defensive and patient, holding a lot of cash. Doesn't mean you can't take a couple of shots here and there, small positions, loose stops sort of things. But for the most part, it's about capital preservation and kind of waiting for the buyers to return. Near term, I do think there's a couple things to watch here. We're still working off that positive divergence in the number of new lows. I mentioned it last week if you watched last week's video. And I will say the indexes have stopped going down in the past 3 to 4 weeks, which, is nothing heroic. It doesn't mean it's a new bull market, but it has stopped going down even as interest rates have been soaring, even as the Fed guy yesterday basically said, expect a couple more big hikes, for the rest of this year, that sort of thing. So, we're starting to see a little bit of resilience, and on an intermediate term basis, if we kind of had a good week next week, we could actually get possibly a green light. So I'll get into all that. So there's a few things to watch out there. I still think there's a lot of dry tinder, a lot of bad news. A lot of people are leaning one way. I saw, not to go on a tangent, but the B of A, Bank of America survey of institutional investors. They have like 600 billion of assets. Oh, that's probably less now. But, they have the biggest cash position since '01. The percent of respondents that anticipate, a good earnings year next year is at the lowest level since the beginning of 2009, that sort of thing. So, there's definitely a lot of people leaning in one direction. So I still think if we can catch a spark, that was the title of this week's Growth Investor, if we're searching for a spark. If we can catch one, I do think the market can have some nice upside and some individual stocks too. But as usual, we just have to wait for it to happen first before doing anything, okay? Let's hop into the charts. As usual, I'm using a program called MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. So here's the NASDAQ, and we're still finding, I just actually noticed this week, this green line is, we just use the 25-day simple moving average. You can use, some people use like a 21-day or 21-day exponential. It doesn't matter. It's all the same sort of thing. But anyway, what I have noticed is, it hasn't been above there since this was the inflation report in early September. So it's been like a month and a half of just below there. That doesn't mean anything, but it is sort of consistently finding resistance at or below that line. So if we can get above that, that would be a small mini short-term character change. But what I really want to talk about, which is also short-term, but we talked about the positive divergence on the new lows. The peak in new lows was back on September 23rd, so almost a month ago. That's not, again, a sign of a new bull market, but it's kind of a first step of many you want to see. Index-wise, here's the NASDAQ. It's down a little bit, 40 points or something, or 100 points, but it's basically unchanged here over the past 3 or 4 weeks. And if you look at the other indexes, S&P, you just see like it's kind of stopped going down here for the moment, testing that 25-day line. Mid-caps and small caps have been a little stronger, but again, you just kind of see no net progress, net basis. The reason I'm bringing that up is just what I said earlier is that, we have had much higher interest rates, which I'll show you in a second. We've had some bad news. And the market's been able to hold in there, number one. Number two, for our intermediate term model, without getting too into the weeds, it just has to hit, the market has to get above where it was 5 weeks ago, 25 days ago, okay, on the intermediate term. So 25 days ago right now is right around here, okay? By the end of next week, it will be somewhere down here. I don't have the exact days counted on this chart. But the bottom line is if the market can hang in here and thrust higher from here, next week or two, we could be at least get an intermediate term green light, and it doesn't mean you go fully invested, of course, but it could be the first step. So it's just something to watch, even though all the news is bad and it seems bad out there. The market, the indexes have actually kind of not gone down here the last month or so. So let's just see if we can kind of continue to hold up and eventually find some buyers and the sellers run out of ammo. As it stands now, we don't anticipate signals. The trend, though, is still down, like I showed you with all these charts. This is IWM. Again, a little bit of relative strength overall, holding that May-June low, no progress here. But we need to see, this thing turn up, which would require, a move somewhere up here, somewhere in the days ahead. So just something to keep your eyes on. The other thing I just want to mention, I have told you that the sort of long dollar short stocks and short bond trade, it's just very obvious. It's very crowded. Everyone knows about it. Everyone knows why it's happening. It's very extended. It's mature. Doesn't mean it can't keep going. I'm a trend follower. But, we're students of the market too. I have noticed that the dollar here, again, since late September, which was that peak in new lows and everything, it has, I don't want to say stalled out. It's still above the 25-day line, but it stopped going up, okay? The other thing I would mention is the 10-year note. This is the 10-year treasury, the yield, so 40 means 4% basically, okay? So up here, as of this morning, it got to 4.3%. And just since, you can just see since, even since this peak here in late September, but especially since the beginning of October, rates are up almost 0.75% in just 2.5 weeks, or 0.7% or whatever it's been. And the market's kind of hanging in there. And then you had the Fed guy said, we're going to raise rates, and the market has so far hung in there. It's just the first step, but it is something that we've all been kind of looking for, where like how much bad news is priced in. And we're just seeing, a little bit of that. TLT is sort of the ETF for, this is tertiary stuff. I mean, to be clear, I'm taking my any actions we take is going to be based on the market itself. But, this is what everyone's talking about, so you kind of pay attention. This is TLT. You can just see a really nice, as in bad, persistent decline. This is long bonds, and kind of a little bit of a puke here. I'm not someone that's going to say that's a low or it's oversold or whatever, but it is accelerating the downside. Whether that's a little too much too soon, we'll see. But it will be interesting to see if there is a counter trend rally in bonds, meaning rates come down. Does the market react to it? Do growth stocks pick up? Because so far they've been holding up pretty well, at least in the past 3-4 weeks, while rates have really been skyrocketing. So just consider it a small thing to watch. Okay, we'll see. But in the meantime, the trends are down. Obviously, the longer term trend is still down. A lot of work to do. But I think between this right here and earnings season, I think we'll kind of get a clue to see if some things are sold out and people might be starting to look ahead to better times or not. Okay. Heading into individual stocks. So biotechs, I still, just looking at the XBI, it's still hanging in there. You can see it's above where it was a couple weeks. Again, it's hanging in there here the last, month, even though there's some bad news going on. Obviously, it's way above this prior low in May and June. So, a lot of these names I've mentioned before, but Biogen, I'm still intrigued by this. What I'm actually intrigued by, you look at the weekly chart. I mentioned this last week. You've had these weird false starts in the stock with these trial results, and this one was Alzheimer's, which totally didn't take. I think this was it. But anyway, it's been a nothing burger. It hasn't done anything for years. And then it gaps up on big volume, yada, yada. And now look at this. Even though the market rates are going up and the market and all this, you kind of have 3 weeks tight in here on a volume dry up. Doesn't guarantee anything in a bear market, but the longer it can hold up, the better. So I'm sort of intrigued that it might be starting a new romance phase, as I mentioned in the letter this week. We'll see. Neurocrene is really the other one I keep watching. It's not doing much, of course, in this market. Nothing's really soaring, but it held that 100 breakout level. Now it's kind of holding this slightly higher level. Earnings growth is big. It's got earnings coming out November 1st. So this is one where you're wondering if it can react well to earnings. And then you have some, this one's interesting. This is Revance. This is they have a competitor to Botox, basically, which less shots, it lasts longer, that sort of thing. It was in top 10. Now the stock, look at it, say, Mike, what are you talking about? The stock's straight down here recently. And my answer is yes. You got to have a stop in place somewhere down a little bit below here. But if you don't own it and you're looking at it and you're interested, we're seeing some of these stocks that have gotten hit. I wouldn't consider this completely broken. I mean, you look at the weekly chart. It certainly has had a nice run here. But the question is, can it rebound? So, maybe if the stock, I'm using this random level. I'm not advising that specific price, but if the stock can rally back up, the market can show some strength. Maybe this can be sort of a pullback resumption pattern. Okay. And that's just elsewhere in biotech. This is Acaro Therapeutics. It's just been, totally changing character. Speculative, no revenues, no earnings, came out with trial results, so on and so forth. I wouldn't be chasing things in this environment personally, but it's up to you. But you kind of want to flag some of these, and the longer they can hold up or even advance, the greater the chance that obviously some institutions are thinking they have something real, okay? Back to that Revance example or similar to it, this is Xometry, which I've mentioned before. I think I mentioned every week, XMTR. Again, it's pulled back here. It's had this big run, had this big decline. I shouldn't say big decline, but then a nice comeback here and really was hitting new, multi-month highs as of a couple weeks ago. And finally, it dipped last week, very low volume on the pullback. And again, this is one of these things where, yes, if you own it, you got to keep a stop in place wherever. But you kind of keep an eye on it. And if the market can come to life, maybe you get a pullback resumption pattern. They do have earnings here on November 10th, but maybe you get, you get one of these classic pullback pattern, which we haven't seen much this year. Usually they just keep pulling back in 2022. But maybe you kind of finally get this sort of pullback pattern. You're able to buy some on the way up on some volume thrust and then see how it goes. Okay, but that one still looks pretty good. Chipotle, just same sort of thing. I'm seeing some of these things that have cracked, definitely cracked, intermediate term support, breaks the 50-day line and all that. But kind of when you're looking at the big picture, and Chipotle's obviously a big $1,500 stock and stuff. But when you're looking at the big picture, it corrected down to 1,200, came up here to 1,750, and here we are at 1,500. So again, can this be sort of a reasonable, tighter structure in here? Maybe. And if you want to, you don't have to do anything. I think it's fine to wait. But if you want to play stuff, you can keep an eye on. This one has earnings next week, October 25th. But, maybe a resumption pattern, gap on earnings, something like that to show you that this is ready to go up. Another one I mentioned months ago that, got destroyed with the market, like a lot of these IPOs. This is Sweet Green. They're a restaurant. They are losing money. It's not my favorite. That's not my favorite thing, but sales growth have been strong. It's kind of this new age, it's a city sort of thing, an urban thing, healthy living, all that. It doesn't have positive momentum yet. I can't say it's in an uptrend, but it has had this rally. It is sloppy and lower priced here in the teens, but it's kind of holding up here. They have earnings here November 8th. Again, you're kind of looking at some of these like, can it hold up here and pop out of here? It doesn't have to be next week, but sometime in the weeks ahead, okay? On sort of the infrastructure stuff or the, that sort of theme. This is Fluor, which is FLR. Again, it reacted well. You can just see this two straight weeks of heavy volume buying here. This stock has always been, you can see it's made progress. I mean, this is just the last couple of years, but it's made progress over time. But there's a lot of ups and downs along the way. It's not kind of a smooth performer. But when it does break out, it can move for a little while. And you can see it's set up this kind of nice looking launching pad basically, and then you have this right here, which a lot of stocks do not, by the way. It does kind of have some volume clues in here. The relative performance line's at a new high. I don't have I'm not saying you got to buy the breakout sort of thing. It does have earnings on November 4th, but it's a nice setup. GTLS, this is Chart Industries. I've mentioned this on and off. Again, the thing I go back to with this is they have a lot of the future looks bright. The earnings estimates are big. When they get orders, these are this type of company where these orders play out over 3 or 4 years usually, or at least a couple of years. But also it looks like it's just had this, it completely reset everything and it kind of keeps getting tighter and tighter. And you just have this big launching pad and it just feels like, hey, look at the relative performance line. If the market gets going and the stock does well, the company's still doing well, the stock can get going. They do have earnings here October 28th next week, so we'll see how it goes. Energy Patch. Actually, before we get to that, I'll end with the Energy Patch, but just a couple other growthy names that people have asked. SMCI, super microcomputer, very much under the radar, small cap. It's only a $3 billion market cap. And it might be one of these things, it looks like big earnings growth this year and then not so much next year. But with that said, $8 of earnings per share this year. They just pre-announced this week. I'm just flagging it because we haven't seen that many earnings gaps yet. I mean, it's still early. Earnings gaps that aren't totally off the bottom like some of these financials. But it did gap up to the 50-day line. Let's just see what happens if it can hold up, round out. Maybe that's a name to keep an eye on. Certainly a newer name. It's a little bit thinner. And then I've had people ask me about Netflix, NFLX. There's nothing doing here for me. But I will say, listen, I mean, the stock completely crashed. It did bottom out here, and it has put in some work, definitely for a few months, and a lot of tightness in here, and some volume clues. And I've mentioned it before, and I have to say, it's really not the worst thing. I mean, there's no earnings growth or anything. But then you get the reaction this week. I would just say it's up to, it's a little hard to see on the daily because it's fallen so much. but it's right up to the 200-day line. We're still seeing a lot of stocks get the thumbs down when they hit the 200-day line or other resistance, up from below. So, we'll see what happens next week. But at least in terms of market sentiment or, big cap, it's good to see a big cap, big liquid name gap on earnings. I'm not saying it's something that I'm excited about, but it's better than the alternative. Let's put it that way. So it's an interesting chart. It has put in some work. It has had some, you just look at the accumulation here, big volume. So let's see if it can hang out here and accelerate higher going forward. Okay. The other thing too here is I'll end with energy stocks. So first, Schlumberger is interesting. Now they're reporting earnings. They reported earnings last night. I am recording this it's about 11 in the morning right now, Eastern time. So who knows where this closes, but just big picture, it does look like it's sort of completing this, it kind of had this choppy uptrend here, and then it's kind of completing this basing structure. Had a big volume clue a couple of weeks ago, obviously a volume clue this week on the up on earnings, a new relative performance peak. So SLB, good it does have good numbers. Oh, that got a little weird, but it does have good numbers. It looks pretty good. So it's just a name to keep an eye on. Again, you probably get some sort of pullback, shakeout, rotation, whatever. But we're seeing similar strength. Schlumberger looks the best. NOV looks pretty good. Same sort of story, a little bit different, but kind of accelerating higher into its old highs. This still has earnings coming out next week. OIH in general, if you just want to, this is the ETF. I personally would rather own one of the leaders, but if you're an ETF person, you might be kind of coming out of this bottom area. And then in terms of the producers, there's a few names. They still look good. There's still a lot of names. I say this every week. They look a little sloppy on the weekly chart, and you kind of wonder whether they topped in June. You go back to here's a Pioneer Natural Resources. You had your top in June. You had your decisive break. And now it's kind of been sloppy, up and down. Looks okay, but you just wonder if this is kind of sort of a multi-month topping area for some of these stocks. But there are names that look good. PBR obviously is a foreign name, and with some huge dividend and stuff, hitting new highs here. Obviously big and liquid and huge numbers. I mean, even next year it's going to be almost $4 a share in earnings, which is crazy. Matador Resources, which is interesting because they're not really a huge dividend payer, but they're actually trying to grow, which is rare in the space these days. But MTDR all the way back to its highs here. They do have earnings early next week, the 25th, so next Monday or Tuesday, I guess. So something to watch, but good relative strength. And outside of oil, just Steel Dynamics, we've seen a couple steel stocks kind of reassert themselves. And again, you've had this sort of this was a multi-month correction. It did have a big run. This was after the Russian invasion and all that stuff. But now it's put in 5-6 months of sort of correcting and consolidating. Growth is slowing down, but earnings are still huge. Even next year, after a 50% decline, they're supposed to make $10. So, maybe it's breaking out here. We'll see, but just seeing some stuff like that. So there are some names, as always, there's some names that are interesting. I'm more interested to see what, if anything, we are seeing some of the, not to go on a tangent again, but we are seeing some of the snaps of the world. This is today on earnings. Snaps is, it's 90% off its high. Obviously, the trend has been down since way back here. So nothing doing, but we're still seeing a lot of accidents out there from a variety of names. I think Whirlpool, although that's found some support, but that got hit. But I'm more interested in seeing if some of these, IPOs, bottoming bases, these stocks that have held up pretty well, like a Shift 4. It's gotten hit here the last 2 days, but still kind of in this range so far. Can it report earnings here on November 7th and gap up to new highs? I think that will be a pretty good tell for the market itself. Okay. But as of now, in Cabot Growth Investors Model Portfolio, we're still 80% cash. We're still a couple lines in the water here and there, but still playing it safe rather than sorry as we wait for the market to kick into gear. Okay. That's all the time I have for today. As always, thanks for listening. And be sure to come back again next week for another Cabot Weekly Review.